Do you have a good credit score but would like to have a better one? eCredible Lift may be able to help you. You probably already know that in the credit reporting industry, you fit into one of three categories. A no-file consumer is someone who does not have a credit file yet. A thin file consumer is someone who has a credit file, but not enough information yet to generate a meaningful credit score. A thick file consumer is someone who has plenty of history, which provides a lot of insight to a potential creditor. Thick file consumers are typically credit active, have many different types of credit accounts in their credit files. This means accounts like credit cards, personal loans, auto loans, and home loans. So the obvious question is, can eCredible Lift help me? The answer? It depends. The more information you have in your credit file, the less impact adding more information will have. But even 1 point of improvement in your credit score may mean you qualify for better terms. Let's see how this works. Most creditors use what are called scorecards to set up and manage their credit policies. A credit policy is simply how a creditor determines what terms to offer to someone applying for credit, based on a variety of inputs into the decision-making process. There are many factors that go into setting up credit policies, but your credit score is a key component. Someone with a higher credit score will be offered better terms than someone with a lower credit score, simply because they are less likely to default on repaying the loan. Here's a simplified version of a scorecard that a creditor might use. Some scorecards have hundreds of data elements. You can see this creditor has a different credit policy to address 4 different types of risk. Most creditors only serve 2 or 3 credit risk categories. Again, these are just examples to illustrate the point. Let's say you were shopping for a new car and wanted to get the best interest rate possible on a 60-month car loan. You're at the dealership and the finance manager checks your credit score. He congratulates you on having an excellent credit score of 779. That's a credit score that you should be very proud of. But the finance manager tells you that if you lift your credit score to 781, you might qualify for the best rate available, pay less interest, and also have a lower monthly payment. If you could just find another 2 points. You could try a lot of different ways to find those extra points, but there's a real possibility that eCredible Lift might help you increase your score by just 2 points. When you enroll in eCredible Lift, you get credit for the bills you're already paying. With your permission, we report many different kinds of phone and utility bills to TransUnion. Even one account could impact your credit score. All you do is link your online accounts to your eCredible profile, so we can download your payment history and share it with participating credit bureaus like TransUnion. In a few days, you'll be able to see the impact these accounts might have on your credit scores. How much impact will a new account have on your credit score? There are many variables that go into impacting a credit score, but these examples are typical of adding an account with 12 months of on-time payments. The size of the payment is also a part of the calculation. For example, an energy bill of $200 per month is going to have more impact than a water bill of $20 per month. In our example, let's assume that you used eCredible Lift and improved your credit score by just 2 points. This would lift your score from a 779 to a 781, allowing you to qualify for the best rate available. You could save $1,364 over the life of this loan. eCredible Lift. Make every payment count.